On today's Rebel's Edge, T plus one or T plus none. Life's a glitch for big nicey names as trading problems plague the New York Stock Exchange. Bath and Body Works investors take a bath as shares go down the drain, and Hindenburg Research takes aim at Axos Financial as the stock loses more than 17%. That and more on today's Rebel's Edge.
Well, no, we have a new master of the cold open, apparently. That was fantastic, Mark. It really
Thank
was.
you. Appreciate you. You got to bring the game up, John. I'm here at Cardone Studios once again. Pete is in the building next door with me, shooting some incredible content with Grant that we can't wait to bring to the proud Rebel Nation. So you got to bring the heat. We are here in Miami. You got to bring the heat. Cold open's got to be red hot. So that's what I do.
The cold open was indeed red hot. So well done, sir. He is, of course, folks, Mark Lepresti. I am John Najarian. You are tuned in to the Rebel's Edge. I'm coming to you from Miami International Airport because my flight was delayed. So instead of being there in studio with Mark, I'm over here. But we appreciate all of you tuning in. As Mark said, the proud Rebel Nation. So let's dive in, Mark, to the macro minute. I'm going to say my part of the macro minute is Germany, which is the largest economy in Europe, and they have seasonally adjusted jobless rate at nearly 6% for the sixth consecutive month. So that, coupled with the Atlanta Fed saying that their model suggests that the economy is only going to produce a GDP of 1.8%. Those are two inputs that I'm looking at right now, Mark, that says this isn't a roaring economy, just the U.S. or globally. What do you got, sir?
Yeah, there's no doubt. We got to keep an eye on Germany. Look, I'm keeping an eye on what's happening with settlement of major trades. I mean, folks woke up to Berkshire Hathaway being down 99%. That was obviously not accurate. That was a mistake. Folks, as most people know, we went from T plus 3 days to settle a trade, which was the case in major U.S. markets for decades, to T plus 1, trade settlement in just 1 day. But a lot of market technicians and market watchers saying the plan is not going off without a hitch. It's going off with a glitch, if I can continue my cold open joke. And it's causing a lot of consternation, particularly on the floor in New York. The other thing I'm looking at, John, we always follow the smart money. It seems like hedge funds are selling certain software names in a major, major way. There's a software sell-off that's been started by some of the smart money players as they pick who the winners and losers will be in the AI race, and you can't paint it with a broad brush. So we're going to be following that story as well.
Absolutely. Well, let's dive into fantastic futures, Mark. And
fantastic
I'm going to say copper is one of the metals, perhaps not precious, but certainly important and precious to industries that demand copper. And prices are declining for both copper and gold. So I'm going to say that trend lower is something that we're paying attention to. I'm sure our friends at the CME, Chicago Mercantile Exchange, are likewise paying attention to that. Are you on the same part of that, Mark, or do you have a different focus for the fantastic future today?
Yeah, I mean, we've been covering the copper story here on the Rebel's Edge for faithful viewers for a couple of weeks now, as it's been really a tale of two markets, a very significant divergence in supply demand in Asian Chinese markets versus U.S. markets. There was a bit of a short squeeze on the CME about 2 Mondays ago, last Monday, I guess, a week ago today. And look, John, interesting news out of Ford this morning. EV sales blowing the doors off expectations, bucking the trend of declining in EV sales or EV demand. That's obviously going to impact different precious metals that go into that ecosystem. So quite a lot of volatility in copper and other precious metals lately. I expect that trend to continue.
Yeah, very interesting futures today. And also very interesting that our friends, Mark, as you mentioned in that cold open, at Hindenburg Research have targeted another stock. And those familiar with Hindenburg know that just like Citron, when they talk about a particular stock that is mentioned by either Citron or Hindenburg, it's not for good reason. It's for
No.
bad reasons. Yeah. And I think that right now, Axos Financial, obviously in their crosshairs. This was a $3 billion plus market cap company, but now they're saying that their analysis says there are significant risks in this company. And so they have been shorting it and they have been profiting ever since they announced this today, Mark.
Yeah, listen, this Hindenburg, aptly named, right, for the rigid airship that went down in flames. You remember people screaming, "Oh, the humanity." Well, Axos investors today are probably also screaming, "Oh, the humanity." When these guys go after a name, they go for the jugular. They're not always right, but they are often right. You remember they went famously after Carl Icahn, lots of other big names. And look, essentially what they're saying here is they conducted interviews with over 20 former employees, essentially saying, one, that their risk management procedures as it relates to what goes on to their balance sheet and their loan book were lacking, and I'm putting that politely, and that they have assets on their books that are not as advertised. So we're going to see, obviously, Axos, one of the leaders in digital banking, peer-to-peer banking, things of that nature. We've liked that name for a variety of different reasons. I have not had the chance yet, John. I was on a plane myself this morning to pour through the Axos report, or excuse me, to pour through Hindenburg's report on Axos, but I'm going to take the time to do it and see. Sometimes with these guys, where there's smoke, there's fire.
Yeah, they do their research. And again, just like our friends over at Citron Research, uh, I think you want to be careful when treading in any of the stocks that they mention, at least for a couple days, because
Right.
usually as word spreads, the stock drops. All right, let's talk about Bath and Body Works, BBWI. Initially down 8%, then 10, then 15. I mean, this one's just continuing lower, Mark. It was nearly a $52 stock yesterday, folks. Today, it's barely hanging on to $45. So that's a pretty big drop. Downbeat guidance, I think, is one of the main culprits here. And the company now expects adjusted EPS of just 31 to 36 cents versus 39 cents. So, it's not surprising that it dropped 10% because, that guidance was down 10 to 12%. What's your take on this one, Mark? And should we be considering putting a toe in the water?
No, so I'd keep my toe out of this Bath and Body Works, and it's there's two parts to the story. One, this is a guidance story, right? The earnings were actually in line. That wasn't the issue. The issue was the forward guidance, and this earnings season has really been a forward guidance story almost across the board. The other piece to the story is we've seen this remarkable resilience in the American consumer to spend on things they really, really want, right? The whole sneaker and kicks phenomenon that seems to have gone through this earnings season with On Holdings, Nike, Foot Locker, Birkenstock, other names. Consumers seem to be relentlessly spending the dollars that they have left or the credit they have left on their shoes and on footwear. So we watched that trend. The other trend to watch is maybe on the lower end, cosmetics, potpourri, and bath salts. They're saying no mas to that. So traders and investors are looking really hard for next earnings season to see where investors will continue, where consumers will continue to spend their hard-earned money. This is a category, John, that clearly is not in favor. Interested to see if the sneaker thing continues. I think it may, particularly through the summer outdoor season. But Bath and Body Works, no toe for me in this pool.
Yep, I am the same, Mark. I am not a buyer of this one yet, nor am I a buyer of Axos for the same reasons that we both cited. Hindenburg and Citron are usually pretty accurate, at least in the short term, about their picks or their slams, whichever way you'd prefer to view that. All right, let's talk about meme stocks because Roaring Kitty got word that he might not be welcome at E-Trade any longer. First of all, Mark, you as a former practicing attorney on the securities side, the fact that they're calling him out for being a customer of E-Trade, I don't think that's kosher. I don't think anybody should be called out as far as where your accounts reside. I know if this was an institution, Mark, that there's probably some restitution due to any institution that might be called out in this way. I really don't understand how they could do this, but apparently his stake, which might have been as much as $170 million, apparently resides at E-Trade, and E-Trade apparently saying they might show him the door. What's your read on this? I mean, the stock's dropping; it's down 5%. GameStop and AMC likewise taking some water over the helm.
Yeah, well, AMC has obviously been moving in tandem or in sympathy with GameStop over the past few weeks since the kitty came roaring back. And look, I'm focused, John, less on whether or not they should have disclosed that he was an account holder there and more on whether or not the allegation that his conduct constitutes potential stock manipulation is accurate. And, I think this may be another one where there's smoke, there may be fire. I think these brokerage firms, E-Trade and others where he may have accounts, are probably saying there's just too much risk here for us to have a guy that's got the ability to move a stock so dramatically with a single tweet, right? The first one being, leaning over the desk, people figuring out what the heck that meant. Then now that, he's got this massive long position, seems to have held it since this thing came roaring back. If there's intent or there's a perception of intent to manipulate a security, and that's broadly interpreted, particularly by Gary Gensler's SEC, you could have a problem. Roaring Kitty could have a problem here, and I would not be surprised to see him shown the door by E-Trade and other financial firms.
Well, it puts a whole new spin on this meme army that has marched with him into these stocks.
Right.
To his benefit, to your point, to his benefit, because people look at that and they say, hey, is he the one causing this upheaval and this volatility? And quite obviously he was, but is it legal or is it not legal? It's certainly not an insider trade, but nonetheless, it may be deemed by some to be not playing within the rules. All right. How about HDB, Mark? This one is one we haven't talked about a lot. It's got businesses in India, Bahrain, Hong Kong, and Dubai. What are they? They're banking and financial services. Yeah. And their share price obviously influenced by the big election in India. Now, Modi did win, but he doesn't have near the power that he had previous to this election because a lot of his supporters in other areas of India, more or less think of those supporters as being like members of our Congress or Parliament or whatever. They were trounced. And so he doesn't have like this blank check that he can just dictate. Now people are a little worried that India might have a little more volatility, Mark. And that's why this stock was getting hit.
Yeah. I mean, listen, in emerging markets, government affairs like this sometimes tend to play a larger role as it relates to investor confidence and how the markets react. Modi's BJP party keeping a majority, but not the same, as you point out, John, nowhere near the same majority that they had during his previous term in administration. So investors questioning whether his very positive for the overall economy in India, whether his policies over the prior years are going to be able to continue unfettered, or whether less pro-business, less pro-industrial growth type of policies will have more of a voice in the parliament in India. So it's going to be very interesting to see how this plays out. But to your point, Modi's back, his BJP party back with a simple majority, but maybe not enough to give folks the confidence that he'll be able to continue the good things that I think he's done for that economy during the prior administration.
Yeah, very well said. And his, I guess the pro business side of this is that now he's going to have to find some, perhaps try to woo some of the other party over to him, and he might find this very difficult, according to a lot of the writings that we've both read. All right. Well, Pete is busy recording with Grant Cardone in the other studio, while Mark and I are doing the Rebels Edge today. And so we don't have Pete's Red Zone Sports. We have Mark and John's Red Zone Sports. And one of the things that you just can't ignore is one of the largest contracts in NFL history, certainly the largest for anybody but a quarterback. I mean, yes, Patrick Mahomes and a host of other quarterbacks have larger contracts, but Justin Jefferson, the Minnesota Vikings unbelievable wide receiver, just got $35 million a year for 4 years, Mark. So this is more or less, boom, they just set a new stake in the ground for what it's going to take to sign other great receivers and people in the category of, game changer in the NFL, other than quarterbacks. This is a massive contract. The NFL, of course, just has a new TV deal that's going to just be pushing billions and billions more into their coffers. And I got to think, Mark, that this is really going to be hard on the Dallas Cowboys, among others. And the reason for that is they have 3 really marquee players for Dallas that are all going to be pointing to this contract saying, yeah, I want that too. And that's not even Dak Prescott, folks. So they also have Dak Prescott. So my gosh, Mark, a lot of money flowing into the NFL and right into the pockets of the biggest stars.
Yeah, I mean, certainly big news. It's not just the quarterbacks taking center stage anymore. We should have our producers cue that Jerry Maguire "Show Me the Money" jumping up and down scene. That would have been perfect for this story. But yeah, what unbelievable 4-year, $140 million contract, guaranteed 100, I think. Congratulations to JJ. I can't do our Pete's Red Zone Sports without acknowledging, or at least mentioning, it's Stanley Cup time, right? Florida knocked out my beloved Rangers, facing off against the Oilers. We're going to see if the third time is the charm for Florida. And it's, John, I didn't know there was ice down here, but they have absolutely been dominating this sport, certainly this season. So we'll see who's your money in this Stanley Cup playoff, John. You got Panthers or Oilers? How do you think it's going to play out?
Well, the Oilers, it's a really interesting thing here, Mark, because it's been a while, and not just a short while, a long while, since we've had a Canadian team in the Stanley Cup Finals.
What are you talking about?
A boot, exactly. And I know our friend Tom Keene over at Bloomberg bemoans that fact because his beloved Canadiens, the Montreal team, or Montreal, hasn't made it in forever. And instead, this is Gretzky's former team. I know he ended up his career playing elsewhere, but he was an Edmonton Oiler. Now, I guess, Mark, that I'm going to go with our mutual friend, Vinny Viola and his Florida Panthers, because Vinny Viola, who owns doesn't own all of it, folks, it's publicly traded, Virtu Financial. I get it. They're one of the biggest high-frequency firms on the street. They they helped feed the pockets that Vinny emptied when he bought that team, Mark. And he didn't have to empty all that much because he bought them right. And now the Panthers have just been a phenom, as has Vinnick's team over on the Tampa Bay side, the Lightning. Yeah. So, I mean, I got to go with the Panthers, but I'd sure love to be sitting in either of these stadiums watching these teams play because they're both fantastic hockey teams. All right, Mark, let's wind it up with a little bit on sports gambling. And so this would be FanDuel, this would be DraftKings, this would be MGM or Wynn or any of the variations of sports betting that have proliferated since it became legal in a number of states, not across the nation, of course, but it's moving into the majority state of the nation in terms of legalized gambling on sports. And there's a guy who is an infielder for the Padres, which is San Diego, of course, and he may get a lifetime ban, Mark. And here's the interesting twist here. He wasn't gambling on games he was playing in, but nonetheless, he's a bit of an insider, isn't he? Because he's injured and he's on their injured list. But while he was on that list, he apparently was willing to cast some shekels here and there on various games. And that's a big no-no in most of these pro sports.
John, I just don't get it, right? It's really incomprehensible. This is not the first time this has happened. I mean, like, you ever hear of Pete Rose? Like, I mean, how many years back does that go? You're going to risk your professional career. This guy was not out of the game, right? He was injured and on the bench or on the sidelines because of the injury, but he still had a future ahead of him in terms of baseball, professional baseball. Now, probably not. Foolish to say the least. But John, here's what I'm excited about. The three of us are going to be in the other main studio here at Cardone Ventures tomorrow doing the Rebel's Edge live, both me, Pete, and John on the desk, as we did to great fanfare just a couple of weeks ago. We're bringing that back. I'm really looking forward to that. That's going to be tomorrow, 1 p.m. Eastern time, of course. And I'm going to be seeing you in a little bit. You're heading over here to the office, I hope.
I am. As soon as we finish this, as soon as we wrap, as they say, with John Farrow, I'll be heading out to see you in Aventura. So looking forward to that, Mark. Great job. Again, cold open, phenomenal. I don't know how you're going to follow that up with another cold open
tomorrow. They got to tune in tomorrow to find out, John. You got to tune in tomorrow.
Yeah, that's a fact, folks. And make sure if you are someone who is interested in options that you check out itsnotanoption.com. I probably had 6 people on the plane, Mark, come up to me and say, hey, how do I get that book again? And I said, it's just the title of the book. If you go to that website, itsnotanoption.com, you can claim your free book, folks. And if you like some of the other stock news that Mark and I were talking about, many of these stocks, including AX, have a lot of unusual activity right now. Well, go to marketrebellion.com/get started. That's marketrebellion.com/get started. You could get started with 1 trade a week, a couple trades a week, 20 trades a day, whatever you're up for. We have subscriptions for you. marketrebellion.com/get started. Education too. We'll see you tomorrow, 1 p.m. Eastern time.